Our next guest aims to have more Filipinos to have long-term investments. Sun Life Investment Management and Trust Corp is the sixth biggest trust company in the Philippines and the second biggest standalone trust entity. With us now for more is Mike Enriquez, the president of Sun Life Investment Management and Trust Corp, with assets under management worth 418 billion pesos as of end June. Good to have you back, Mike. Welcome to the program.
Hi, good morning, Kathy.
All right, so congratulations in order, marking your fourth anniversary this month. You started operations on July 28th.
Yes, that's correct. And we're already 4 years this July 26th. So I think over the last 4 years, we have really increased our assets under management, of course, driven by our anchor client, our insurance business.
You have indeed, and I'm keeping watch of what you said. You'd be on track to reaching 450 billion AUM by the end of this year. Is that still on track, despite the global policy uncertainties and slowing local growth?
We are still very bullish on that. We're on track. I think the only detractor would be where the equity market levels will be at the end of the year, because it comprises a big chunk of our portfolio. But I think the biggest driver for this year would be the launch of our retail unit investment trust funds, which we're quite excited about.
Right, but as you said, it is a marker, the PSEI, and where it ends this year. What are you targeting? As a couple of stock brokerages already lowered their forecasts for the second half.
We are, our house view would be about 6,900 for this year. So there's still a big room for it to move higher from where it is currently, especially now as we've experienced a recent correction from last week.
Right. So if you keep it at 6,900, then you're well on your way to 450 B AUM. But which investment solutions are driving growth? Is it the investment management accounts, corporate trust accounts, retirement fund accounts, pre-need accounts, and you even have the unit investment trust funds, as you mentioned?
Yes. For us, the biggest contributor will still be the growth of the AUM coming from the insurance portfolios. We also manage our mutual fund business. Right now, we're quite keen on really building this unit investment trust fund business from retail, and we're excited that we're launching some new fund strategies, both local and offshore fund strategies, which I think would be a good driver for increased AUM for the rest of the year.
It's really a balancing act that you have to do. How are you now balancing that then, growing the retail investments through the UTIFs while maintaining the strong relationships that you've got with the institutionals and the high net worth clients?
Well, for us, it complements the existing business that we have currently, because our main distributor would be our financial advisors as well, in terms of how we would penetrate our existing insurance clients, complementing them with investment products and vice versa. So I think this would definitely help us build fast our AUM growth, especially for some of the institutional markets right now. We've been getting a lot of increase on retirement fund mandates, which I think is something quite nice, because these are more resilient and long-term clients who would like to look at our services for what do you call this? Retirement fund mandates.
Yeah, let's pick up on the retirement funds. CIMEPA's given us a pause for thought, lowering stock transaction taxes on the one hand, and at the same time levying 20% tax on the interest earned for long-term deposits. What are your clients' key concerns, and how are you advising them these days?
I think the biggest effect would be for the ones who previously enjoyed long-term deposits, the ones that are more than 5 years. Previously, their interest is not subject to withholding taxes. Now it's subject to withholding taxes. But I think most of the clients that we handle buy government securities and corporate bonds, which ever since they've been subjected to the 20% withholding tax and interest payments. I think what they're excited about would be more on the lower friction costs on equity trading, especially for the UITFs and the mutual funds that we manage. I think the CIMEPA law has helped us lower friction costs for both, because number one, at least it's now clarified that both UITFs and mutual funds are not subject to DST. And if the equity-centric funds will be subjected to lower sales taxes, which definitely would help boost income for our investors.
So that's what you're recommending right now, that they could consider the other universe of assets that weren't considered before because of the DSTs and the stock transaction taxes. Our last conversation 2 months ago, you made a mention of the preference for fixed income as core holdings. Does that still stand? I mean, where are equities now in your universe of assets?
Yes, fixed income will continue to be a core holding, especially for investors who would like to balance off volatility of the equity markets and the risk taking for the equity market. Right now, what our investors are looking at would be certainty of their principal, and then a little bit of risk taking, investing in both local and offshore equity markets. And we've seen, as you've mentioned, S&P and Nasdaq have hit all-time highs every day for the last week. So I think there is also that angle that investors should also look at diversifying, not only from fixed income to equities, but also to dollar assets, especially global funds.
And keeping that principle intact, very important. Mike, thank you so much for your insights. Appreciate it. Mike Enriquez of Sun Life Investment Management and Trust Corp.